morning, Wednesday. Hope you guys are having a great day. Welcome to this edition of the DMC. I'm your host, Chuck Fulkerson. We're going to take a look at the market from an educator's perspective, identifying breakouts, reversals, and all that fun jazz. Starting first with the S&P 500. We are up 5 points this morning as our hourly chart is showing a little bit of movement higher from an overnight where we sold off after yesterday's kind of midday sell-off that we had. We sold off kind of midday yesterday, got to a low around 7 p.m., and then as the Asian markets opened up, we've seen a rally ever since that point. But strong continuation of a downtrend is the expectation. We are still overall net sellers as our 4-hour chart continues to trade to the downside. We've reached that point where we spoke about last week of the head and shoulders, right? Last week we spoke about this head and shoulders pattern, here being the neckline, and this measurement being from the head to the top of the neck, or from the top of the head to the base of the neckline, duplicating that and moving it down. We are actually sitting right about at our measured move in our head and shoulders. Now, does that mean that our downward move is over? Not at all. Matter of fact, there's a good chance that we're going to continue to trade down. This would be our measured move in our area of demand, where if we're going to see a bounce, this is where we would anticipate seeing one. We are, taking a look at our momentum as it comes down into that region. Our momentum to the downside is slowing a bit as we are seeing lower swing lows in price, yet higher swing lows in momentum. So it doesn't mean that we're going to reverse, but it is something to take into account and to take a look at, so that on a maybe a bigger picture time frame, if you're going to find an entry, it's going to be utilizing a reversal candlestick. Now, we had that last week on Thursday. We had a very strong reversal candlestick with the with this hammer candle here. And as one of my dear friends in our trade rooms says, it works until it doesn't, and that's exactly what happened. Right? We got a higher than Thursday's high on Friday, and then kapowie. Here we had Monday and Tuesday as we came down a bit lower from that region. So the point being is that we'll look for a reversal candlestick somewhere in here on the daily chart. If I don't get a reversal candlestick, I'm going to continue overall staying bearish. And I'm gonna stay bearish until I'm proven, to not be in the first place. So we're gonna look at our 4-hour chart and look for selling opportunities, even though we're up about 5 points this morning. So where are our selling opportunities? Well, looking at what we have here, I think you've actually got a rollover occurring right about now in the markets in general. Price could roll over from that region. Go into a smaller time frame, say the 15-minute chart, looking at our levels that exist up above me. I may want to take a look at this area right up in here where I have all of these upper wicks. I've also got a little level right in here, both of which are fairly clean areas. And so when I have two levels that close to each other that are both fairly clean, I typically make the first level a confirmation entry and the second level a limit entry. That's typically the best way that I've found to safely trade levels when they're that close to one another. Now you say, well, isn't there a trade to be had from here up to here? Technically there could be, right? You want to take a little bit of a breakout above the Globex high. I can understand that. I think there's probably room for a trade above the Globex high, especially because this little wick over wick area here was the catalyst for this little reversal down. But we traded more than halfway into that zone, so I anticipate that we're probably going to be able to make it up to this 39.34 area before we see much of a reversal for today. So I think that actually sets up for a pretty good move down at some point today. So a little bit of a breakout exists on the smallest of time frames for a day trader above this 39.23 area. And then a reversal exists right there at about 39.34, provided that we get a trade into that level and we come out of that zone. So I think is the best way to look at the S&P for today. Still continuing to be short, but cautiously entering those positions using a confirmation entry on the first go. As far as the NASDAQ goes, let me get rid of some of these levels that we have here. NASDAQ broke down below our little breakout area, hit the actual demand, and rallied up off of that little demand area. But by hitting that twice and then moving away, it actually sets up for the next breakout down below that low. And it looks as though we're potentially rolling over from that point right now. So if you are interested in a candle-to-candle short, you could also get short right down in here at 12.029 if you think this is really going to roll over and head back down. Now, up above us, similar to what we looked at in the S&P, I don't like this level as much as I do the S&P version of the level. And then this one, we've got long wicks up right here. So I'm really not as big of a fan of the NASDAQ reversal as I am the S&P. So if you're going to take a reversal, I think the S&P is actually the better way to go, because these levels are not quite as clean for a reversal as what I would want that exists in the NASDAQ. I really would like to see better, more clearly formed levels of reversal if I'm gonna take something like that. Now, what about a breakout? Well, if you want to take the breakout above the Globex high, we're sitting, chopping around there, basing around inside there. You would anticipate the NASDAQ to move a bit better. Now, that being said, all of that is in the context of a bigger picture downward trend. So remember that, that's occurring. We also have a bit of a trend line here that we are coming up right at the top of this, trend line and rolling over. So be aware of that as well. So I think our downside momentum is waning, coming into the end of a measured move off of the head and shoulders, but I've got to trade the chart that's in front of me, and the chart that's in front of me is most decidedly bearish. So look for the rollover trade coming out of here. Just know that we are, closing in on some of these demand areas down below. Okay. Yesterday we saw that we had a bit of a bump up in crude oil. There was a bit of a news that OPEC had said, "Hey, we're gonna slow down production." Why would you do that? But anyway, OPEC said we're going to slow down production, so we saw a bump happen in crude during the overnight hours, and it wasn't a huge piece of news, but it definitely did cause a bit of a rally in price. Our next area of supply that is really our strongest one would be this area right up in here. And so a reversal back to this 88.85 would be, I think, a pretty good area for a potential reversal. I'm going to get rid of some of these levels up here that are a little further away because we are not into that range as of yet. Our 4-hour trend does indeed continue to be down, so looking to be a seller on the return back to some of these quality areas of supply as we continue to move a bit lower. In terms of our bonds and currencies, looking at the euro has a little bit of, we rallied up right close to parity yesterday, and then sold off pretty hard out of that area, out of that level. So continuation is, once again, trading the chart in front of us, the prices would continue to head down as our 4-hour trend does continue to be bearish. We've got a really nice reversal that just occurred right around the European Open. And so above that, you've got a couple of decent areas of supply that exist. For example, this area right in here is a very clean supply area on this smaller time frame. And frankly, the level that was just formed right here. So if we come back up into this region, look for a retest back into here and an opportunity to get short in the euro futures market for those of you that trade the euro. So those are a couple of trade ideas for today. Just remember, the thing to remember is to trade the chart that's in front of you. It's tempting to think far out, and I've got other plans and thoughts of what may happen, but more importantly is what is happening. Trade the chart in front of you this today. So that's all I got. If you guys have any questions, shoot us an email, support@tradersarmy.com. Until tomorrow, I will talk to you soon. See ya.